Hello guys, good day. Welcome to the second part of our video lecture in share-based compensation through share appreciation rights. In the first part of this video lecture, guys, we were able to discuss already the concept of a share appreciation rights and the different accounting issues that would try to help you in ascertaining the proper accounting of share appreciation rights. All right. Now, in this video lecture, we will be discussing another concern pertaining to share appreciation rights. Okay. This time, what if there is a cash and share alternative? What is this cash and share alternative? Some share based payment transactions allow the employee the choice as to whether to settle the transaction in cash or by issuing equity shares. So, an employee may have the right to choose between cash alternative or share alternative. You have heard it right, guys, that there are also instances where the corporation will issue a share based compensation where there is a prerogative to choose whether it is to be settled under cash or share alternative. So when we talk about cash alternative, again, cash payment equal to the market value of a certain number of shares subject to certain conditions, while share alternative is that there is a discharge or there is an issuance of equity shares to the employees. Now, the accounting of this type instrument or the accounting for this type of instrument depends on which party has the choice of settlement. All right. So, who has the option to choose whether the employees or the entity? Now, if the entity has the choice of settlement, then there is no accounting problem. The entity shall account for the instrument initially either as liability or equity, but not both. So, again, we don't have so much of issues when the prerogative to choose on which alternative to be followed is the entity. Thus, the compound financial instrument is accounted for as partly liability, which is the cash alternative, and partly equity, guys, which is the share alternative. Now, the equity component is usually the fair value of the whole compound financial instrument minus the fair value of the liability compound component, and the equity component will always have the residual amount. So again, when there is this type of arrangement, then it will be considered as um, compound instrument where there is a recognition of an equity account and there is a recognition of a liability account. So to facilitate that concept easily, let's use this into an illustration. Okay, so let us say on January 1, 2019, an entity granted to an employee the right to choose either 12,000 shares, obviously that is for share alternative, and a cash payment equal to market value of 10,000 phantom shares. Okay, which also constitutes for your cash alternative. So the grant is conditional upon the completion of 3 years of service. So that means the grant is with vesting period, particularly 3 years in this problem. If the employee chooses the share alternative, the share must be held for 3 years after the vesting date. Alright? And the par value of the share is 25 pesos, and grant date on January 1, 2019, the share price is 51 pesos. Now, the share prices for the 3 year vesting period are 54 on 2019, 60 pesos on 2020, and 65 on December 2021. Now, in this case, after taking into account the effects of post-vesting restrictions, the entity has estimated that the fair value of share alternative is 48 pesos per share. And the standard, particularly PFRS 2 paragraph 38, requires that this compound financial instrument shall be accounted for separately as liability and equity. So guys, there should be a separate accounting for these two alternatives. So we will be computing the fair value of the share alternative and the fair value of the liability. So in this case, if the first option or the first alternative will be followed, then therefore we will have a total fair value of share alternative na 576,000. And if the alternative naman is cash settled or cash payment, so the fair value of the liability naman on grant date, which was on January 1, 2019, was 51 pesos. Multiply it by 10,000 phantom shares. So that is 510,000. So in that case, we have equity component of 66,000. No? There is a 66,000 equity component. So the fair value of the share alternative, which is 576,000, will be the actual fair value of the whole compound financial instrument. Okay? So the total value of your compound financial instrument will be the fair value of the share alternative, which is in that case, we have 576,000. Okay? So let us account the journal entries on 2019. So you have there on December 31, we have debit to salaries, credit to share options outstanding for 22,000. This is simply the allocation of equity component equally over the 3-year vesting period. So if you have noticed, in the previous computation, we have computed an equity component of 66,000. So guys, that 66,000 is from the total value of our compound financial instrument, which is 576,000, minus the fair value of the liability, which is 510,000, giving us a 66,000 na component, equity component. And that equity component will be credited to share options for 3 years. Good for 3 years vesting period. So that is why in 2019, we debit salaries for 66,000 divided by 3 years or 22,000, and then credit to share options outstanding for 22,000 also. On the same date as well, we will be recording your salaries expense and your accrued salaries payable. So if you have noticed, we recorded an equity account and we recorded a liability account because again, it is a compound financial instrument. But as to the amount of the accrued salaries payable that we will be recording, then that will be equal to the fair value on December 31 sa imuhang phantom shares, guys, which is the basis of your accrued salaries payable. So you have their fair value on December 31, 2019, which is 54 pesos. Here, this one, 54,000. 54,000 multiplied by the total number of phantom shares. So this is 10,000, right? 10,000. So 10,000 times 54. So we have a total liability of 540,000. And that 540, just like what we did in our share options outstanding, we will also be um, allocate it for the entire vesting period for 3 years. So that will be 540,000 divided by 3. So we'll have 180,000. So on December 31, we have debit to salaries for 180,000 and then credit to accrued salaries payable also for 180,000. All right. Now, if the problem would ask you to compute how much is the total salaries to be recorded on 2019, now needless to say, you need to accumulate no your salaries expense from your equity component and from your liability component, which is 22,000 plus 180,000. That means you will be recognizing a total salaries of 202,000 on December 31, 2019. Okay? Now, to continue our illustration, to continue our discussion for the journal entries, now, again, on December 31, 31, we don't have any um, changes in recognizing our equity component. So that is still 22,000 from the 66,000 na share or equity component divided by 3 years. So again, debit to salaries for 22 and then credit to share options outstanding for 22,000. What will differ is your recognition ng accrued salaries payable because in this case, your fair value actually of your phantom shares has changed from 54 pesos on December 31, 2019 to 60 pesos in December 31, 2020. So instead of multiplying it by 54, we will multiply it this time by 60. Okay? So, again, multiply it sa ato ang number of shares na 10,000. So, that gives us our total liability na 600 for the entire 3 years. Pero, take note that that 600 is good for 3 years. So, we need to divide it by 3 and multiply it by 2 para makompute nato ang ato ang cumulative accrued liability on December 31, okay, 2020, which is in this case 600,000 divided by 3 years times 2, 400. All right? That 400 is good for 2 years. But take note again that last year, 2019, we were able to recognize already 180 of it. So therefore, in this year, 2020, 400 minus 180, then we will be recognizing accrued salaries payable of 220 na lang. Okay? So debit to salaries expense, credit to accrued salaries payable. Okay? So just like in the previous year, your total salaries in 2020 will be the 2020 the 22,000 and the 220,000. In short, for a total of 242,000 only for the year 2020. Okay? Now let's proceed on 2021. Okay? On 2021, same debit to salaries, share options outstanding for 22,000. That is for your equity component. And then this time, let's account for our total accrued salaries payable. No? So let's go back again in the problem. The market value on December 31, 2021 becomes 65 from 60. So this will be our basis this time to compute for our accrued liability on December 31, 2021. So that gives us a total of 650,000 from 10K or 10,000 phantom shares times 65 fair market value. So we have a total of 650 minus obviously 400. Okay, where did we get that 400,000? That's actually from your 180,000 recognized in 2019 and the 220,000 that was recognized in 2020. So that's a total of 400. So only 250 of it will be additionally be recorded on December 31. Okay? So December 31, debit to salaries for 250 and credit to accrued salaries payable for 250,000. For in this year alone, 2021, your total salaries will be 272,000. Now, the final accounting, guys, this is very crucial. Okay? The method of settlement chosen by the employee will now be the determinant in the final accounting. Now, if the employee has chosen the cash alternative or the employee has chosen the equity alternative, then that will be the determining point as to our final accounting. So in this case, for example, let us assume, number one, if the employee has chosen cash alternative, meaning the option niya is the option to receive cash. So ang journal entry na to, guys, will be, obviously, we should close out your share options outstanding. 'Di ba? Since dili man siya ma-exercise and then we recorded share options outstanding for the past 3 years and it will not be exercised naman since it is not the option of the employee, so it will be the recognized. So again, as what I have told you, it will be the recognized. So since it was credited last time, so we will debit it by accrued outstanding share options outstanding for 66,000 and then credit to share premium for 66,000. So share options outstanding, if not exercised, will be credited to share premium. And also, since there is cash alternative na gipili, then there is payment of cash na 650,000. So debit to accrued salaries payable to close out your accrued salaries payable amounting to 650,000 and then credit to cash for 650,000. So where did we get this 650,000? So let's go back from 2019. So that 650,000, guys, is from 180 for 2019, 220 for 2020, and 250 for 2021. That gives you a total accrued salaries payable of 650,000. Okay? Now, What if naman guys, the employee opted otherwise, no? It opted to use equity alternative. So kung equity alternative, then that means mm, the option was to receive shares. Okay? The option was to receive shares. Okay? So in this case, there will be no cash that will be paid on the employees. Okay? There will be no cash to be paid sa ato ang mga employees. So in this case, guys, we will have debit to accrued salaries payable, no? We will also close accrued salaries payable na 650,000. Okay, kay wala man tay i-recognize na accrued salaries payable, so we will close that 650 and then close also share options outstanding for 66,000, but we will be crediting, this is not for cash, but we will be crediting share capital that is equivalent to 12,000 shares. Okay? 12,000 shares times the par value. How much was the par value of your ordinary shares? We have, if you could look back the problem, that is for 25 pesos par value. So 12,000 times 25 pesos, so there will be share capital na 300,000. Okay na? This is not cash. Okay, this is not cash, but instead it is share capital for 300,000. And then share premium na 416,000. So obviously this is the balancing figure from 650 plus 66,000 minus 300,000 na ordinary share capital. So this gives you share premium of 416,000. Also, I'd like to put an emphasis na the number of shares to be distributed is not actually the 10,000 phantom shares, because that 10,000 phantom shares was your basis for cash alternative. What will be used na figures here to be distributed in equity settled will be your 12,000. Okay? Katong entire 12,000 nga shares for share alternative, not the 10,000 phantom shares. Okay? So that will be our determining figure, no, as final accounting when there is actually an alternative to receive shares or to receive cash. Okay? It depends on the alternative or the option of the employee. Okay? So this time, let us proceed with another illustration. Okay? Example, on January 1, 2014, okay, an entity purchased equipment for 5 million and the supplier can choose how the purchase is to be settled. Okay? The choices are 50,000 shares with par value of 50 pesos in 1 year's time, or there's a vesting period na 1 year, or cash payment equal to the market value of 40,000 phantom shares on December 31, 2014. Okay? So that is the details for the cash alternative. At grant date on January 1, 2014, the market price of each share is actually 110. Now, since the supplier has the choice of settlement, then the instrument issued for the purchase of the equipment will be compound financial instrument. Again, guys, let me remind you that when the option is on the point, when the option is in the hand of the um, supplier or the employee, then that means we will record it as equity component or compound financial instrument. Okay? Compound financial instrument. Pero kung ang option is naa sa ato, we don't have an accounting issue with that at all. Right? Because we will be recording it either as liability or as an equity. Okay? So to continue, we have here, if the fair value of the assets received can be measured directly and easily, as in this case, the equity component is the fair value of the asset minus the fair value of the liability. So in this case, the fair value of the equipment naman is given for 5 million. So therefore, we could easily um, compute for the equity component. So we just simply compare your equipment and your liability amount, which is 600,000. So 5 million minus 4.4 million. So our equity component will be 600,000. And that, take note, if the fair value of the asset received cannot be measured directly, then the asset is recorded at the fair value of the shares to be issued. Okay? Kung dili available ang fair value sa equipment, then second in the hierarchy of valuation is the fair value of the asset to be issued. Okay? So in this case, the journal entries pertinent to the transaction will be on January 1, 2014, obviously guys, debit to equipment for 5 million, credit to accounts payable for 4.4 million, and then credit to share options outstanding for 600,000. Now, where did we get that 600,000 na share options outstanding? So that is actually gikan sa ato ang equity component na 600,000. Okay? And the 4.4 is obviously para sa ato ang liability account, no? That is for the cash settled or cash option or cash alternative. Okay? Now, second, to record the settlement assuming that the supplier has chosen the cash alternative and the market price of the share is 130. Now, we don't actually need to, you know, vest it and divide it for how many years, since again, the vesting period is just 1 year. Immediately at the end of the 1 year, pwede na mag-vest or pwede na ma-exercise kung unsa man ang option ni supplier. So in this case, let's assume na supplier has chosen the cash alternative. So if cash alternative, then that means there will be payment of cash. Obviously, there is a payment of cash. So to compute, all right, to compute for our total na amount to be settled, we need to compute first for our total cash payment. So cash payment nato guys will be equal to the phantom shares na how much was our phantom shares? Our phantom shares was 40,000 multiply to the market value. And let us say the market value of that phantom shares at December 31, 2014 is 130. So that means we have 40,000 times 130. So we have 5.2 million na total cash settlement. Pero take note, the fair value of our liability lang when we recorded it on January 1, 2014 was just 4.4. Okay? 4.4 pero we settled it for 5.2. So that means the difference of 800,000 guys will be recorded as interest expense. Okay? It will be recorded as interest expense. So, ang journal entry na to will be debit to accounts payable for 4.4 million, credit to share options outstanding for 600, and then credit it to share premium, no? Share options outstanding, kung cash settled ang option, it will be credited to share premium for whatever is the amount. In this case, its figure is 600,000, so debit to share options outstanding for 600, and then credit to share premium 600 also. And then the computed interest expense earlier implied interest expense na 800,000 and then cash credit for 5.2 million, which is again equivalent to the 40,000 phantom shares times the market price of that phantom shares on December 31, 2014. Okay? Now, what if it's the other way around? No? What if the not the employee this time but the supplier no has chosen the share alternative. So dito since share alternative there will be no cash payment to be made. What will be made is the issuance of share cap or ordinary share. So in this case we have debit muna tayo ng accounts payable guys para i-close na to ang accounts payable. The same we did sa number 2 since walang saysay si share options outstanding diri kay wala siya gipili and therefore i-close na to siya. Same also here sa accounts payable since wala siya gipili diri so ato siyang i-close. Okay? So debit to accounts payable for 4.4 million and then obviously since you have exercised your share options credit ito debit ito for 600,000 which is the value of it and then credit to share capital, no? How many shares that was issued based on the condition 50,000 with a par value of 50 pesos. So in that case, debit to share cap for 50,000 times par value na 50 pesos. So we have 2.5 million. And then your share premium Okay? Your share premium also na 2.5 million. So where did we get the 2.5? So that is actually a balancing figure from your accounts payable na 4.4, share options outstanding na 6 million. So that gives you a 5 million minus your credited share capital na 2.5 million. So that's it. Your share premium na 2.5 million. All right? So those are the important steps and procedures that we need to observe if ever the corporation will be issuing a cash and or share alternative para sa atuang mga employees as share-based compensation. Okay? So again, we have the references for this lecture. And if you have any more questions, you can actually refer it to our video lecture, virtual class, or comment down in the comment section below if you have clarifications or if you would like to unpuzzle some bubbles of thoughts, you may direct it in our video or comment section below. All right. So thank you very much for your time and watching this video lecture. See you on our virtual class. All right. Thank you and God bless.